All right, Pack, welcome back to another video here on the Dividend Doggo Show on YouTube, and I am bringing you in, this is the weekly portfolio review. We are now done with the first week of May, and boy, has it kind of been a doozy for a lot of people. So a lot of kind of unexpected things have been happening with the market, like Amazon going down. Just everything seems to be all over the place. We are on a crazy roller coaster ride here with the stock market. So let's go ahead and jump in. I did some buys this week. As you can see from last week's cash balance, it is zeroed out. So we have put that money to work in the portfolio to buy us forward income. And we're going to dive in and see how I did for the week. Now, I had a pretty wild week. It was up, it was down. We started the week out on the 2nd of May at $730,000 in the portfolio of total value. And then we kind of moved up a little bit, and then we had a pretty massive dip from 757 to 743. That's a pretty big swing day to day. And then it came back up on Friday, and here we are on the 7th, which is Saturday morning, the day that you will get this video. So overall, the week was up pretty high. The Fed announced interest rates getting hiked up 0.5%. I believe that was on the 4th, and then we had a pretty massive jump down on the 5th, and then it kind of rebounded a little bit for my portfolio. But as you can see here, when we're looking at the portfolio, we did have sectors in the red still at the end of the week. And then we had, some pretty massive bumps across the portfolio. Kobo Money was up, finance is up, healthcare is up pretty significantly. This is mainly AbbVie and Johnson & Johnson, mostly AbbVie. And then the big smack was VST. Man, this stock just it just keeps going and going. It's pretty wild. They announced a second dividend raise for 2022. So we already got one dividend raise for the first quarter, and then now we're getting a second one for the next payment, which in grand total equates to an 18%, just under, I believe, 18% dividend raise for the year. In addition to that, we got earnings. They discussed the share buybacks. They've done, I believe it's $1.1 billion already of share buybacks, a little more than that. And they still have over 800 million to go in share buybacks for this company for this year. This is about an as you can see here, $11.7 billion market cap. So they're still buying back about 7%, 7 to 8% there of the company shares for this year alone. So I expect some pretty massive fluctuation with this. It hit 27, which is absolutely wild to me this week. That hitting $27 just is completely unexpected, because a little over a year ago you could have bought the stock for a little over $15, which is pretty wild, almost a double up there, if you had been buying it at those prices. So they did do the dividend yield. It's now 17.7 cents per share, which increases my overall dividend from this company somewhere in the ballpark of just under $200 total for the year. That's absolutely wild to me. I'm ecstatically happy that this is really holding up the portfolio. As you can see, it was half of the gains for the entire week. Now, Duke was also up 1% at the end of the week, which a lot of people, I think, are kind of flooding to the I wouldn't call them necessarily safer stocks for recession, but they handle a little bit better. The utility sector does traditionally. I believe I saw a post that was really interesting, and I should have saved it to share in the video, because it basically said in the 1980s, when inflation was exceptionally high, almost 23 or 24% of the entire S&P stock market value was in the utilities sector. So that is kind of interesting overall. I'm not sure if that was utilities alone or if that included energy as energy production. It probably does. But you kind of have to be careful when you see things like that posted online. You have to actually dive into it to get the full details. However, that it's down in 2021. I believe it was like 3 or 4% total of the S&P is utilities, which is absolutely wild. That's a huge difference. You're talking about less than a fifth. So I do expect those to kind of keep going up a little bit. We did see a little bit of a boost throughout the week in the finance sector. So if you check this out, we started the week at 81,000 in finance, and we were all the way up at 86. The Fed announced the interest rate hike, and we declined to the end of the week. So, that's pretty significant there. You can see here we have Ally, JP Morgan, Bank of America, Bank of OZK, and Hingham Institution for Savings. Now, Hingham ended the week down 2%, which this is going to be getting back into the buy territory when I was originally picking this up. This stock had kind of shot up in price and was absolutely wild, but this was right around 300 when I was buying it. So I'm still up a little bit on the stock. It's more of a growth stock with a dividend component. So it's one of those that I'm keeping kind of on my radar. Now, the other one that I'm hopefully, I'm happy to build up JP Morgan at these prices. My cost basis is 123.93, so we're right at about where I was buying it, and you're getting an over 3% dividend yield on that price for JP Morgan, which is, in my opinion, one of the highest quality banks with the best leadership in the business that you can be buying. So this is one that's definitely going to be on my radar to try to add a little bit more to my position. I really liked having this stock up in about the $30,000 range. So as I get some more dividend income, and once we get over the tax hurdle of 2021, I will hopefully be getting to add some more to that position. I kind of hope that it does stay in that range for at least a couple months for me. Now, the other thing I wanted to bring up is Como Money was up this week. Berkshire Hathaway was down a little bit, but SCHD is going to be a workhorse for the portfolio overall. I would like to get this position into the $100,000 to $200,000 range because it's a high quality fund that I can just sleep easy. If anything happened to me, this would direct all of the dividend income into this particular pie here. So it would be kind of spread out among Berkshire Hathaway and SCHD, and that would be the bridge money to go from about age 50 to or 50 to 52, somewhere in there, until retirement age of 59 and a half, where we can get access to 401k money. The goal would be to live off the dividends from this portfolio and kind of have extra money with that Como Money pie that we could potentially sell off. If we need some bulk money, we can get that from Berkshire Hathaway or from some of the other stuff that we're building up that doesn't pay a dividend, like Google, for instance. I am hoping tech, you can see, was down a little bit here. Microsoft down about 1%. Google was up 1% this week. I'm hoping that continues. Google will continue to grow over the next couple years. Hopefully, if it's given at least a decade or so to build up, I'm sure that will be something impactful later in the future. Industrials ended the week up about 2.9% for the portfolio, as you can see here. That's mainly off the back of Lockheed Martin being up 4%. This, I believe, this is skyrocketed up to $449. When I was buying this, it was $100 cheaper. This is not a position that I'll be adding to. I'll just be holding on to that. That is the significant jump. Obviously, there's a lot going on across the world that's kind of causing that stock to jump up a bit. But overall, we did have some buys for the week, so let's go ahead and jump into what those were. Now, these buys were spread out a little bit. We have VST at $673. We have JP Morgan at $255, and then we have Lowe's at $220. So these paid dividends, and I am definitely happy to be adding to BST. Again, it was right around or below my cost basis. We can go take a look at that here real quick. So it ended the week down just a little bit, about 1% here. However, I was able to add, and it was, I believe, just below my cost basis on adding for this particular position, which is absolutely fantastic. So yeah, so right around my cost basis, $39.74 is exactly what we bought at. So it did go down a little bit more throughout the end of the week there. But that's fine. I will just keep building up as this is below my cost basis. I'm happy to add this. This is a monthly paying dividend stock that sells covered calls against kind of the tech sector, and has a lot in Microsoft, Apple, Google, all kinds of different stocks. So it does have a high expense ratio. This stock is not for everyone. This is a very, very small portion of the portfolio total, so please keep that in mind if you're looking at buying some of these stocks. Do a lot of due diligence in them, as this one is not for everyone. So make sure that you know what you're buying and how much you're buying it for, and what your expected returns are on that particular stock before you make any purchases with your portfolio, as I do expect that tech can sell off. It could sell off another 20-30%, and that stock will follow that down. So keep that in mind. Overall, the week was really good. We were up $20,094 in market gains, and then we earned dividends of $77.64 for the week, which is pretty fantastic. So I want to kind of leave you with this question of how is your portfolio holding up right now? I'm going to continue just to buy as dividends roll in, and once I get a little bit of extra money, I'm going to kind of throw that at the portfolio and see if I can get some cheaper stocks while they're on sale here. So what exactly are you buying this week? Did you buy anything at all this week? And how do you feel about the interest rate hikes and all of the other things kind of going on as far as the market is concerned? Thank you for watching. I appreciate every single one of you. All of the likes, the comments, and the subscriptions. We're at about 2,500 now, which is absolutely amazing. And I hope that all of you have an absolutely fantastic weekend. I'm going to be heading out to play with the dogs some, because it is kind of rainy here in Seattle. And it's one of those days where we're going to get the toys for in the house out and play as much as possible and wear out that puppy energy. Thank you very much for watching. Have a fantastic week going into the second week of May, and I appreciate all of you.